Hey, what's up, everybody? Y'all know me. I'm gonna give it a second or two to see if people join. For all the people that's here, let me know who you are in the chat. Let me know if you can hear me, so I ain't talking to myself. For the people that's just joining, we giving it a second. Let other people join. If you don't mind, sound off a little bit in the chat. Let me know who you are, where you from. Hey, Divine, what's up? I see you out there. Davida, I see you out there. You're here every week. Thanks for joining. Thanks for the support. Can y'all hear me good over there? Jay, what's up? How's it going? All right, I'm gonna wait till 2 minutes after just to get people in and start hitting on some topics. I mean, as you seen, the thumbnail showed about Warren Buffett, but of course, I'm gonna hit you with the weekly notes before. Thanks for joining. All right, I'm itching to get into it, but I'm gonna give it a second. I'm gonna wait till 2 minutes past the hour. For y'all recording on the, for everybody that's watching the recording, you have to seek forward to about the 2 minute mark, and then that's when we get started. But it looked like we're there, so here we go. Let's get into it. Hey, what's up, everybody? Welcome to The Process. It's Kirby. As you noticed, the weekly wrap-up. Talk about a whole bunch of things, what's going on in politics, what's going on in the financial news. But I really focus on what's going on in the financial news. What's going on in politics. Politics is politics. It don't matter Democrat, Republican, who's in office. It really don't impact you until it impacts you. The thing is, you don't want one person, one party to impact your way of life. You want to be able to control your own way of life. There's a lot of things that I'm proud of that I want to announce, but I'm going to give that for a couple weeks to let that process through before I jump the gun and announce some new things and new events that's going on in my life. But for everything else, let's get into the wrap-up. A couple housekeeping notes for the people that's out there. It'll be a new service that's coming out in the next couple weeks. I have a meeting on it tomorrow, just thinking of, different products and services that I can provide to the viewers, to help them out in their financial situation. Again, I have a call tomorrow, and we're going to talk about different platforms and different things to set up, trying to get more of a one-on-one coaching consultation thing going, but it'll be more information about that moving forward. So just wanted to point out that and let people know that that's in the pipeline also. And for all the people that's joining, thank you for joining. How we usually do this, I go over the weekly notes or weekly news articles that's going out in the financial space to help you as, a personal citizen. And then what I do is put all your comments in the questions or whatever. And then after I get done going with the wrap up, then I come back and hit all the questions that's in there. Me, I'm here for a long time. I'm not here just to get on, hey, y'all listen to me and then let me get off. I'm here to answer your questions or whatever. So please put your questions in there, but we're going to get to them. We're going to hit every question. We're not going to miss one, so don't be shy about answering questions. But let's get into it. So what's going on this week? What's going on this week? The first thing that came up to me on Monday, 3G Capital. 3G Capital is a venture capitalist firm. They acquired Skechers. Skechers, they got a couple celebrities up under their umbrella, like Snoop and a couple other people. But Skechers, 3G Capital bought all of Skechers shares and they went private. That's what happened. Hey, Ludine, how's it going? So what that's telling you is Skechers And I'm bringing up Skechers because Skechers, it goes through an array of platforms, an array of different groups of age groups. And I ain't gonna lie, Skechers, I guess I'm getting old, but Skechers be hitting sometimes. The comfort level is for real. But what you see is they're taking themselves off the main market and going private, so they don't have to announce quarterly earnings. They don't have to deal with all the nuance of being a publicly traded company. That's what Skechers is doing. So they're going private. They don't have to. And y'all know I always say when you go into a public company, when you're a private company, you go into a public company, you sell your soul to the devil because you have to meet matrix. You have to sacrifice good employees just to make sure the matrix work, because the economic cycle goes up and down and things of that nature, that in a down cycle, i.e. tariff, then now you got to get rid of good employees when you're a public company. I've been in the past 2 weeks, I've been in a lot of boardrooms talking to a lot of people talking about impacts to employees. So that's why I'm sharing this information with you. And I'm talking about some of the Fortune 500 companies. I'm not talking about the, mom and pop shops that's really looking at the margin, really looking at the impact of how tariff will work. And then I see people joining in and they comment and things like that. Again, just put your comments in there, and then we'll go on from there. But anyway, so what else is going on? So I got rid of the 3G. OPEC. Now y'all see gas prices going down. Gas prices are going down, and the reason why gas prices are going down, everybody wants to say, hey, it's because Trump's in office, prices are going down. Me, as some people know, I am a physical conservative. I like a lot of principles that pushes the fact that you are very focused on your money and not just giving it away to other people. But the reason why oil prices are going down is because OPEC, that is the cartel, that's the Irans, that's the Iraqs, that's the Saudi Arabias, that's all these people. They are producing more oil. Again, supply demand curve, just look at that. Supply is one side, demand is the other side. Move up and down the supply and demand, and then you come to your equilibrium where they cross. So OPEC is producing more oil. The demand for oil is not there, so it's driving prices down. I wish I could say it was Trump doing it all, but it is not. It is OPEC that's pushing the narrative to get lower prices down. I know Trump said drill, baby, drill. He's going to give up government federal land for leasing to drill oil, but that takes time. That hasn't happened. Excuse me. That hasn't happened between January to now, that they went and drilled the oil, put a refiner in there, and then they're pumping oil. It's just not. So understand, that's where it's coming from. It's coming from OPEC. It's not coming from the Trump government. For the student loan borrowers out there, only reason why I'm bringing this up, because I just want to keep you informed. Student loan borrowers out there, if you didn't pay off your student loans during COVID when there was 0% interest, and now you have federal student loans, starting next month, the federal government will start garnishing your paycheck for delinquent loans. Right now on the books, it is 5.3 million. That is the number. 5.3 million people this summer that will be garnished from their paychecks because of student loans. And the first tranche is coming next week, and I think it's 153,000. So for you student loan borrowers out there of federal student loans, just know the government is coming to take that out of your paychecks if you are delinquent or you stop paying your student loans or what have you. So I just want you to be prepared instead of surprised. That came out this week also. For the people that was in my Discord group, we disbanded the Discord group and we just brought it all to YouTube. But for the people that but the people that was in my Discord group, I've talked about assumptions for the past year and a half. I talked about studying the 1980s, start understanding what stagflation economies mean and how they will matriculate and how you can get deals done. An article came out Wednesday. Assumption loans are up 126%. 126%. So that means all those people that was buying during COVID, the 2, 3, 4% loans, people are buying their homes and assuming their loans at that 2, 3, 4%, and they're just carrying on the loans from there. We talked about it. We talked about it years ago in the Discord group that will be the best way to acquire different nuances and different properties. But now it's caught on to the mainstream. There's news articles about it. So you might wanna look at that as an avenue. And of course, I always say when it hit the news and it's a good idea, it's probably too late because everybody already saturated the market. But again, it's up 126%. All right, going to the individual stocks. Ford, y'all know I like Ford. I like Ford as a proxy of a money market account. I love Ford as a proxy, especially now, as a proxy to a savings account, CD. And the only reason why is because Ford is producing a dividend, especially is giving profit sharing, and it's north of 5-6%. It's higher than a high yield savings account. So that's the reason why I'm bringing up Ford. I'm not sitting here saying, hey, buy Ford because it's going to be $200 a share in 5 years from now. I look at it as a proxy to the alternative of the Bank of Americas, the Chase, the JP Morgans. You having the money sitting in a savings account and then it's paying you 0.05% in interest. When you have a company, of course, great American company, they didn't file bankruptcy during the GFC. They're providing a dividend, which is north of 6% if you include the profit sharing. I prefer to park my money there than park my money elsewhere just to, of course, make extra capital and make extra returns on that. But I'm not using it as a proxy. I'm not saying it's a Tesla where the value of the stock is going to go up 2, 3, 4x from here. I'm using it as a proxy to alternative to the high yield savings account. But Ford in general, Ford announced that they will have price hikes. They will have price hikes. And the thing that they're hiking prices on are the vehicles that's coming from Mexico. And the two vehicles that's coming from Mexico are the EV vehicles. And that's the Mustang Mach-E for all y'all people that was waiting for it. Mustang Mach-E starting this week will increase in price. And the other one is my favorite, and this is the one, I'm not gonna lie, I was planning on getting the Maverick. The Maverick will increase in price because it's produced in Mexico, and then you have the tariffs that go into the United States. The Maverick, I just like it. I don't like the full F-150 because I don't drive enough and I don't load a whole bunch of stuff in my vehicle to transport it around. But I like the hybrid of, having the SUV front, but then also in case some stuff happened, I need to throw some stuff in the back and then pile it on. But just for the people that was out there in the market for the Mach-E and the Maverick, those prices are going up. Stagflation conditions. All right, we're gonna pass stagflation conditions because I feel like I've been talking about stagflation for about 4 years now. And the only reason why I've been talking about it that long, and I'm not sitting here saying I'm Nostradamus or anything like that. The only thing I do is I see what's happening in the economy, and then I study what happened previously before. History don't repeat, but it rhymes. So when interest rates are up, housing prices are up, employment is shaky, and inflation is up, that's a stagflation economy. And I've been talking about this for years. For the people that was in the Discord group and things like that, they know what I mean. So now we're here. So that's the only reason why I'm not just harping on stagflation. We're here. I was trying to prepare people beforehand to get ready for it. But what happens with that is you want to understand, how did the people with money back then make money, or how did the people who was broke make money back in the stagflation economy? And that's the things that are always pushed off. Always pushed off the bartering system. Far as, hey, I have an asset, I'll trade you for another asset. I pushed off seller finance, which I did 2 of those deals last year. I did those 2 years ago, and then I closed out 2 of those deals this year, actually. Talk about assumptions. Talk about different avenues than the conventional way that you should go, than you normally would go, the normal way you would go to buy a house or a property or something like that. That is the things that I went after. And I was trying to prepare people to make that happen. Another thing that came out this week, Section 8. Section 8. The Trump administration, the government, and all those people out there. Section 8, they're talking about eliminating or maneuvering Section 8. Now, for the people that's far left, the people that's far right, they have different opinions on it. This is what I derive after looking at both sides. What the Trump administration is saying is able-bodied adults shouldn't veg out on Section 8. Now, some people might agree or disagree, but put that in the comment section. They're also saying that the people that's on Section 8, they should have a 2-year runway where they know that, hey, it's about to stop, and then it glides them to the path of, maybe getting a job, depending on the Section 8 in different states, because it's ran differently in every county in every state, let alone every state. So then so that gives them the runway to make that happen. Give them an off-ramp. So if this passed today, they have 2 years to get their life in order to make that happen. Me, I would say I'm conflicted, but I'm not. I'm not conflicted for 2 reasons. And yes, I own rental properties. Yes, I have Section 8 tenants. How Florida runs it for the most part, and I'll just talk about my portfolio. I won't talk about everything that's going on in the state because I don't know what everything's going on in the state. In my portfolio, I have 5 or 6 Section 8 tenants. 5 or 6 Section 8 tenants. Out of the 5 or 6, I only have 1 that the government is paying majority of their rent. All the other tenants, they are paying at least 50% of their rent. At least 50%. I want to say 60, but I got to look at the numbers again. At least 60% of their rent is paid out of their pocket because of the job that they have. So it's not 100% government. So I'm a little conflicted. Now, is there people that need Section 8 benefits? Yes. But I am 100% a proponent, and people know this, that I'm all for helping the people that's unwilling to help. That's not unwilling, but the people that unable to help themselves. And what I mean by that is somebody 70, 75, 80 years old, they don't have enough income coming in paying to pay for where they live. The government should step in. But able-bodied people should not be able to take advantage of the system. And I'm saying that as a guy that receives Section 8 benefits. I benefit from people being on Section 8, and I'm still saying it. I know that I have tenants that's able-bodied that can afford it. So I'm not being a hypocrite about this. I'm not sitting in my glass house saying, oh, well, just because I made it, you should make it. I am literally there, eyes on seeing that they can do it. Now, they should do some other things and they're gaming the system to stay in the system, but I believe 100% that they can do it 100% on their own, and they're gaming the system to stay on. But with that, the Section 8 program, I know there's big numbers out there that they're talking about $32 billion. They're taking $32 billion from the Section 8 program. That's not the truth. The truth is, just like the abortion mandate, just like other things that the administration did, they're pushing it down to the state level. So the federal government, instead of giving $32 billion and just saying, here's $32 billion, y'all deal with Section 8 like that, what they're doing is passing grants, passing initiatives, and all that things at the state level and having the state manage it. Now, if the state decides to get rid of all the Section 8 program, it's the state that you live in. It's not the federal government. So they're not eliminating the $32 billion. What they're doing is they just redistributing it and having the onus, meaning the employees, the workforce, and everything, be on the state employees instead of the federal employees. So just so you understand that. And then the last one. I didn't want to talk about tariffs this week, but tariffs is just prevalent in the news. This weekend, right now, the trade partners of the United States are talking to the trade partners of China. They're talking about coming up with different trade talks and all this, poignant things that's going on right now. And Trump came out on Friday and said he's willing to drop the tariff on China to 80%. I mean, I think it's like 145 now, but he's willing to drop it to 80%. Sounds good. Sounds good, but the thing is, if you hoping that the tariffs is going to end tomorrow, you're sadly mistaken. If you think that the tariffs is going to end Sunday and the stock market is going to rally up, I believe you're sadly mistaken. So what I believe this meeting is just China trying to talk the U.S. down. Because unbeknownst to a lot of people, the first ships from China just got to the United States yesterday. They just got from China yesterday that have the 145% tariff on them. I know everybody think it's instantaneously, but no, it takes ships a while to get from China to the United States. So it just got to the port of Los Angeles yesterday. So these are the first ships. Now, we already talked about last week that shipping is down 35-40% from previous weeks from China. But now these vessels are starting to show up, and these are the first avenues that's going on there. And then what the government's going to see, what China's going to see, what the businesses in China are going to see, they're going to see is with this higher price, is the American consumer still going to buy the price? Now, if you buy the product, God bless you. If they sell out a product, God bless you. That's going to be a longer span on the tariff talk, because if you can keep buying out the product, and I'm saying you, I mean American people, period. If you keep buying out the product, even with the 145% tariff on there, China's just going to say, oh, well, I guess we don't need to do nothing. We still selling out. If you don't buy it and it's a detriment, which I believe it will be a detriment, because some people will be able to buy that price at 145%, but a lot of people won't. And then it will start impacting their economy. Then they'll come to the trade table. Then they'll start talking about, hey, making equal and fair trade. Maybe they'll start talking about, hey, United States, we charge 30% tariffs on all the goods that you ship to China. It's okay if you do 30% tariffs on us. Just like the deal that we just had with UK that just was announced Thursday or Friday, I believe. Friday, that came out. The tariff is still 10% in the UK because UK still charge US goods 10%. But the deal was more of them saying that we will buy more product from the United States and we will not limit the United States' ability to sell your product in the United States. Just so you have an understanding of how all that works. But all in all, let's get to the thumbnail, and then I went through the weekly wrap-up. I mean, if it's other things that you've seen in the news or whatever, hit it in the comment section, and we can make that happen, and we'll talk about that at the end. But let's go to the thumbnail. The thumbnail, we talked about Warren Buffett, and this was the big news. The big news was Warren Buffett did step down as the CEO of Berkshire Hathaway. He's going to step down at the end of this year. He petitioned the board on Monday of this week, and the board approved that he will step down, and Adele will step, not Adele the singer, but Adele the non-insurance manager of Berkshire Hathaway will take over as CEO. I received about 6 to 7 calls this week of people asking me, hey, Warren Buffett's out of CEO, you gonna buy now? And the reason why they're asking me that is because I've always said, and I hope Warren Buffett lived for another 150 years. And I'm saying that with 100% sincerity. Another 150 years. But in private, I said, and I'm saying it publicly now, in private I said, when Warren Buffett passes, because Warren Buffett is 94 years old. I'm not sitting here praying on the man's demise, but he's 94 years old. I said when Warren Buffett passes, it will open the floodgates for everybody to question everything Berkshire Hathaway do after Warren Buffett passed than now. And it will take a strong CEO to withstand it all. And I can go back to the Apple situation where that happened. So anyway, so now they saw Warren Buffett walk down as CEO. And then they was wondering, hey, are you buying it now? And I said no. Because no matter what, even though Adele is the new CEO of Berkshire Hathaway in 2026, not now, Warren Buffett still is. Warren Buffett is still the chairman. The chairman still gets to tell the CEO what to do. And I don't think Adele is going to venture far off the path that Warren Buffett's had this whole time. So the thing that I'm waiting on, and this is the only reason, when Berkshire Hathaway dropped down 6% when it was announced that Warren Buffett was going to pass the torch, when it dropped down 6% on Monday? No, I did not buy. I'm waiting for the raid of everybody that's trying to take Warren Buffett's position in the financial landscape to question it, just like when Steve Jobs passed away for Apple. If people don't remember, Apple themselves used to be a debt-free company. And then everybody questioned Tim Cook and what have you, saying, oh, Apple is too expensive. I mean, not it's too expensive. They said Apple is too valuable. They need to take out debt. They need to do debt buybacks. They need to do dividends. Hint, hint, Berkshire Hathaway, even though it's worth almost worth almost $900,000 a share, they don't pay dividends either. So I'm waiting for all those people to come out the woodworks. And then for people that's been following Apple for a minute, when that happened, Apple was sitting at $700 a share and then proceeded to drop down to like $450 a share. So I'm waiting for that drop for all these quote unquote experts to say Berkshire Hathaway is over, and then it fear investors out of the market on Berkshire Hathaway. And then I will step in because I believe Idell, I believe Warren Buffett's son, I can't think of his name right now, so forgive me, Warren Buffett's son will hold down the fort and they will continue the progress in the process that they've been had. And I believe that is the opportunity that I will have when it comes to Berkshire Hathaway. Now, do I still have it in different funds and things like that? Yes. But when I'm planning on making a big splash, that is when I plan on making a big splash then, because I believe Berkshire Hathaway is still the best diversified apparatus that's out there. But with that, I got about 5 minutes. I'm going to go over a couple of Warren Buffett's famous quotes. And I 100% believe. Now, Warren Buffett, he's the face of this. But Benjamin Graham, his professor in college, I think it was the 1940s. I think it was the 40s. He was the pioneer of this. Warren Buffett made it famous, but Benjamin Graham was the one that instilled this information in him. So I'm going to give Warren Buffett the credit because that's who they quote him as. But these quotes will last you your lifetime, your grandkids' lifetime, and your grandkids' lifetime. But I'm just going to hit a couple of them. I got like 100 here, but I'm just going to hit a couple of the ones that I like the most. All right, number 7 on the list. The most important thing to do if you find yourself in a hole, stop digging. I'll say it again. The most important thing to do if you find yourself in a hole, stop digging. Now, I didn't say my story so many ways, but it always came down to the same thing. Me having that conversation in the mirror with myself, and I've dug many holes. And I just said, stop. Just stop. Y'all know my favorite words is stop spending. But that's what I told myself. Stop. Everything that I did before here got me to this position. And I'm in a big-ass hole. Just stop. Everything that I knew before, it was wrong, or I'm executing wrong, stop. Just stop digging. So I love that quote because it gives me a major reflection on the things that happen in my life. Number 8, price is what you pay, value is what you get. Now, I know a lot of people that follow the TikTok, the social media shorts, the viral videos and things like that. And the manufacturer, China, did a great job of showing, especially for the Birkin bags and all that luxury item stuff. It was manufactured in China, saying the same bags that y'all paying $30,000, $40,000 for, it only costs about $300-$400 to make. And now it was a PR stunt on their part to try to get people to stop buying the Western country stuff. But that's what it is. It's understanding the value and stop just paying the price just to say, hey, I got a Birkin. Having a Birkin don't mean nothing, especially if you're paying 2,500x what the actual price of it is. So price is what you pay, value is what you get. All right, going to number 14. I got a long list, like I said, but I'm only going to hit a couple of them because I want to get the questions in. Never invest in a business you cannot understand. I've said this to many people out there. When people come to me with a stock, when people come to me with an investment idea, the first question to ask is, how do you make money? If you can't explain how the company makes money in less than 30 seconds, you shouldn't be investing. Now, there has been some misses because I didn't go back and research the question that was asked. But that's how it should work. You have to understand the nuance of a business because you're going to put your hard-earned, life-saving money that you had to work hours and hours and hours to get to put it in there. So if you never invest in a business, you don't understand. 18. Now I'm gonna pass 18. I'm gonna go straight to 20 because I gotta cut time. The best chance to deploy capital is when things are going down. Now, y'all know me. I always say, prepare, don't be surprised. Millionaires are made in a recession. Millionaires are made in a recession. So for the people that prepared when they wasn't in a recession to have a lot of capital to take advantage of asset prices and values when it's in a recession, those are the people that make the money. So I know I sound crazy when I'm saying a lot of this stuff, especially on social media, even in the Discord, but these are principles that one of the wealthiest men on earth has ever lived by. So I'm not telling you nothing that's outrageous. It might sound crazy because just the walk of life that we came from didn't make sense, but there you have it. And then I'll put the link to this, Warren Buffett quotes down there. But let me keep going. 22. Diversification is protection against ignorance. It makes little sense if you know what you're doing. Now, y'all also know that I am not a fan of diversification. And I'm not a fan of diversification on your road to trying to get rich or your road trying to get wealthy. I am a fan of diversification once you get there. Once you got that $1 million, $2 million, $3 million sitting there, now diversify so you don't lose it. But I'm not a fan of diversification to get there. Find one thing that you're 100% solid, confident on, and have competency on, and put as much money as possible in there, and then run up the bag. Then once you run up the bag, then you diversify. So 22, again, another Warren Buffett quote. Just let you know, I didn't make this up myself. Diversification may preserve wealth. Now let's go to 23. Diversification may preserve wealth, but concentration builds wealth. That goes back to the same thing I just said. And I've been saying this way before the Warren Buffett quote, and I knew Warren Buffett said it. That's why I'm a big fan of his. You have to be concentrated to build the wealth. If you got 40, 50 stocks and you're out there and you sitting here thinking like, oh, I got all these stocks. I got $10,000 in stocks. I got $5 in each stock. And then the stock go up 200%. You made $15. Let's say you got $50 in there. You made $150. It don't help you at all. You need to be competent and cognizant and understand what you're investing in and put a lot of money in one or two stocks, or just go invest into the market. If you don't want to do the work, just invest into the market so you don't have no problem with it at all. Again, another Warren Buffett quote. I know I've been saying it, not giving credit where credit's due. 26. I try to invest in businesses that are wonderful that an idiot can run them, because sooner or later, one will. I don't invest in stocks. I don't invest in businesses because who's the person that's running it. I invest on the concept of a business. Like I said, an idiot one day will run the business. And I'm not talking bad about Tesla, but a lot of people invest in Tesla because Elon Musk runs it. If Elon Musk said today that he's going to step down as the CEO of Tesla, the stock, I guarantee you, it'll plummet 70, 80%. Because people are investing in him, his brain. Like everything, people know that we only have a finite amount of time on Earth. So you're risking your money that this guy is going to live way past you. Because either he's going to step down or one day he's going to pass away. And you got your family fortune into it. Think about it. People are not investing in Tesla because of EV. They're investing in Tesla because of all the great things that Elon Musk will produce later. Now the state of Connecticut already denied him his bonus that he supposed to receive of, 50, $60 billion. He runs 4 or 5 other different companies. Do Elon Musk need Tesla? No, Tesla needs Elon Musk more. So that's a question you really got to ask yourself. I'm not saying that Tesla's a bad investment, but understand most of the people that invest in Tesla invest in Elon Musk, not Tesla itself, because that's the only product of Elon Musk that they can invest in. They can't invest in X. They can't invest in a boring company. They can't invest in SpaceX. They can't invest in XAI. The only thing that they can use to invest in Elon Musk's brainstem is Tesla. That's why they do it. That's why the PE is like 156 compared to a normal standard automotive company's PE being between 6 and 18. Like 153. So take that for what it's worth. All right, I'm going to hit 2 or 3 more and then we're going to get into the questions. 32. Cash combined with courage in a time of crisis is priceless. That goes down to being greedy when everybody else is fearful. Remember, you got to have the opposite mindset of what just naturally what you would believe to be a successful investor. When things are going bad, everybody think hunker down, let's wait for it. But what you should be thinking if you're an investor is, hey, everybody's hunkering down, everybody's cutting prices, let me buy these assets now because the economy will recover. That's why I say most millionaires are the courageous ones that become millionaires in a recession. But again, you have to prepare before a recession comes. If you don't know, the United States, they average a recession every 8 to 10 years. And we well past due. FYI. Let me hit one more. And I'll probably hit a couple more of these in the weeks to come, but it's something that I just like. And then it goes to fearful and greedy. Warren Buffett said, I will tell you how to become rich. Close the door, be fearful when others are greedy, and be greedy. Be fearful when others are greedy, and be greedy when others are fearful. Like we talk about all the time. When the stock market going up, everybody's euphoric. I'm selling off assets. I'm selling off stocks to close other things. Like January and February when Warren Buffett and Berkshire Hathaway was building up their cash pile, I was selling stocks. I was selling cryptocurrency to pay off single family rental properties that I had, because y'all know my thoughts on rental properties is single families are great. People stay there for a long term. But if we get into a bad economic cycle, if they can't pay the mortgage, unlike a multifamily, if one person moves out, then we got other tenants paying the mortgage. But in single families, if they move out, then I'm on the hook for it. So I just said, let me get rid of that obligation way before. And that was in January and February. But that's just what it is. And that was a euphoric moment. That was Trump's in office. The market's going to skyrocket another 200, 300% like it did when he got into office before. But I'm very pragmatic. I'm very understanding of what's going on there. With that, so that was a couple of my Buffettisms. I call them Grahamisms, but most people don't know who Benjamin Graham is. But Warren Buffett made Benjamin Graham's theories the forefront of investing. But those right there are things that you should just have in your mental Rolodex. You should have in your toolbox. If you just understand that and repeat those things to yourself every time and look for those opportunities, you will have more money than you will know what to do with. All right, with all that being said, let's get into the questions. I know we got a couple trolls out there, so I'm gonna bypass those. What does it mean to us? What does it mean to us? This is Jay. Them going private. What can we do? What do we have to look forward to? When a company goes private, you don't have to look forward to nothing. If you own the stock in, i.e. Skechers, only thing that happens is you get paid the amount that the deal was announced on. So let's say the deal was announced on $50 a share. How many shares you have, you get paid $50 a share once it closes. But what is also showing to me, especially most shoe companies are made in the Chinas, is made in the Indonesias, the Malaysias, and things like that. What is showing to me is This company, Skechers, is a major brand. Even though a lot of people in the inner city don't use it, Skechers is a major brand. And what they didn't want to do is become become victims to the financial markets. Because of course, in the publicly traded market, every year you have to increase revenue, increase profits, increase revenue, increase profits. They found a partner that could take them private so they didn't have to announce all that stuff. They probably found a partner that is willing to weather the storm with them so they don't have to sit there and worry about valuation fluctuating and making sure they stay in compliance with the SEC or the NYSE or the NASDAQ or what have you. So that's what it means. But if you own the stock, then you're good. You made a profit, hopefully. And then if not, then it doesn't matter to you in the whole scheme of things, but understand that they see more headway coming through, especially from the sneaker brands, and especially with all this tariff things that's going on. What else we got? T. Horsley, could those garnishments move SoFi? That's a good question. No, I don't believe it'll move SoFi because these garnishments itself is just government loans, period. Now, SoFi is the biggest private student loan provider that's out there, but the government loans, that's a whole nother issue. Now, and it's very hard to, I'm trying to look for the right words and not piss people off, but it's very hard to make student loans bankruptable. That's what I'm really looking for. And then that's why the federal government can go after them. Now, all student loans are not created the same, but federal student loans, you cannot file, for the most part, you cannot file bankruptcy on there. It's not much forgiveness, especially with the Trump administration out there. But again, we had a long time, and like I said, Biden did a great strategy to get elected. I would have used it myself, but we had a long time of no interest at all. I think the people that's getting garnished at this point, they just gave up and said, hell, I ain't paying it. I'm not dealing with it. So that's why they go on this avenue, because if I get a loan at 0%, I'm going to try to pay as much as possible. But it's people, I truly believe that they just said, I'm not paying it, period. What else we got? Jay, are they changing interest on the student loans? No, the interest is the interest. I don't know if it's, it's not fixed rate debt. It could be, flexible. It did variable rate debt for some, fixed rate for some. And the thing is, just people just didn't pay it. Literally from COVID till hell, just a couple months ago, interest rate was 0. For 3 months, they didn't have to even pay and didn't even have to worry about being on their credit report. I'm just going. So for me, that's what I'm saying. I don't even think they care about paying. That's what I say. KK, you're right. Once it's in the news, it's too late. So that's why I always try to be ahead of the news. I'm not saying I'm Nostradamus. All I'm saying is I see things matriculate. I'm always looking around the corner. I'm seeing the next shoe to drop and trying to prevent people, especially the people that follow this channel, to not be victim of the next shoe to drop. Once it dropped, it dropped. Like this whole stagflation thing, I've talked about it for many months, hell, even years. This is what it was formulating to. Now, do people listen? Maybe. Do people not listen? Hell yeah. And then now we're here. So now it's harder to tell you, all right, now let's get prepared for stagflation, which you could still get prepared for stagflation, but you had a 2-year head start. You would have been way ahead of the game if you prepared then and then not think that I was crazy. And again, I know it sounds crazy because I'm saying it way before it even hit the news. So, but it is really, I don't think I'm a fortune teller. I really just go based off what the news is showing and what the economic indicators are showing and make it happen. What else we got? What's your proudest moment? My proudest moment, I will say this true and true again, was the ability to retire my wife at 37 years old. I don't care about how much money I make. I don't care if it's millions, billions. Just to be able to say, you don't have to do this no more. Because I've never seen it before in my life. Most people that I know, they especially the boomers, they had the pension that, let them retire. It was just saying, hey, we good, you taken care of, you help. I'm saying you help me as I'm talking to my wife, but really I was the one helping her. She was the one that was doing all the work. So that was the greatest thing for me. Because I never seen somebody be able to tell their spouse, hey, you can sit down. I got this from here. So that was my proudest moment. KK said, I agree with this. I know that it was a time I really needed it and couldn't get it because people are not making a financial change and staying for 10 years. Yeah, that's right. People are not staying for 10 years and that's the thing. Investment is a long-term horizon. I invested in my 20s to take care of my 50s. I invested in my 30s to take care of my 60s and 70s. I invest now in case I'm alive that it'll take care of years beyond. But I'm still investing hardcore, for my kids and grandkids. I believe the proverb that a good man or woman, I'm adding woman in there, but it said a good man will ensure that his children's children have wealth. That's why I do it. I wish I did it for me. Well, no, I don't wish I did it for me because I'd never do it. But that's why I do it. I do it so everybody can benefit from the hard work. I want my kid, I want my grandkid, and now her parents going to be mad. But I want her to be like, hey, Dad, can you get this? And they say no, and they be like, oh, don't worry about it, Granddaddy got it. That's what I want. That's what I invest for. I don't invest. I still have enough money to go on trips and do this and do that. But that's what I invest for. I'm trying to complete the proverb. I'm trying not to be selfish and just worry about myself saying, oh, okay, I'm taken care of. These kids better figure it out themselves. What the hell you have them for if that's the plan? Now, I'm not saying give them everything and they don't have to do nothing. But they shouldn't, nowhere in hell, start nowhere near close at the same level you started at. And that's just my view. Jonathan Velasquez, Apple dropping from $700 share to $450 is a 35% drop. Does that play a factor in what you should be looking for in Berkshire Hathaway? What is the percentage drop where you will be looking to buy Berkshire Hathaway? That's a good question. I don't know what the price will be once that time comes, but 35%, oh, I'm all in. I'm head first in that. So yeah, so 35%, that was a huge drop. And I'll have a funny story about that another time. But yeah, I'm looking for a major drop, and then I'm gonna get more concentrated into the Berkshire Hathaway space, because I still believe that even though the media will be talking down on it, saying, hey, they have no guidance, Warren Buffett is not there no more, Charlie Munger is always gone, and then it's gonna be, all these, up and coming hedge fund guys trying to seem like they're smarter than Idell. And the only reason why I'm saying that, because for the past 30 years, they've been trying to sound like they're more smarter than Buffett. So I already know that's coming. It will cause fear. People will exit, and then that will give me my opportunity. So I'm not doing it until before. I don't know where the stock price will be when that time comes, but I hope Warren Buffett lives, hundreds of more years, and they don't have the opportunity. But if they do, I will take advantage of it. Jay, millionaires are made in recession is a great topic for this platform. Yeah, that's, just look at it. And that's the reason why I always try to talk in advance of the next shoe to drop. Is if in good times, I'm sitting here saving my money instead of blowing it, going to the Bahamas, going on cruises and all that. I'm saving my money in good times. Let's just say $100,000. Let's keep the number small. And then an economic crash happens, and then a property, let's just use an 8, 12, 15 unit apartment complex that was trading at, let's say, $2 million in great times. And then we hit the depths of recession, just like the great financial crisis. And that same property trading at $800,000, $700,000. And you can pick it up for $100,000. You pick it up for $100,000, and then you do your thing. Yeah, it's going to be work at the beginning. But then let's say the economy recovered like it did in 2012, 2014, 2018. And then now that price is $5 million. You didn't create $2 or $3 million off $100,000. Millionaires and billionaires are created in a recession. Y'all know I always say, wide is the road to destruction. Do not go out there and do what everybody else is doing. Now, when everybody was, partying, living it up during COVID and all that, I was taking my budget flight from here to Europe because my family was in different locations. You didn't see me living it up, living it live. Even last year, you didn't see me saying, hey, I'm doing this. But now they're talking about recession. I'm saying, hey, I'm going every damn place ever. Because I know airline prices are cheaper. All these people with money during good times, y'all done drove the price up. Now the demand is not there. The price is coming down. I get to take advantage and do all that. I can buy assets. I can travel. I can go get hotels on the low. But nobody ain't got no money. But I do. I do not follow the crowd whatsoever. And that's what Warren Buffett things are saying. Stop following the crowd. Do the opposite of what the crowd doing because it will benefit you more later. And now I'm a big proponent of that. Ludine, I want to go to Georgia. Should I look for a property first or air property? I don't understand what that means. Where are you from? It's a nice country. All right, YouTube user. I'm from the United States. I'll just use that there. Move to Georgia. Should I go ahead and look for a property? If you looking to move, I would find the property before I move. Now you can wing it. You can wing it, but the thing is, you don't want to wing it and then you don't find what you're looking for. So I would pre-game it. I would look for. I would scour the third-party websites. I would scour the Zales, the Zillow. I said Zales, the Zillow, the Redfins, and what have you, to see if there's a property to my liking that's out there to the location that you want. Because you don't want to be out there and then you sitting there in an Airbnb. Now, if you want to go there and rent for a year or two before you buy what you want, that makes sense. But I wouldn't Airbnb it because it will cost you way more money than you need to find that location that you're looking for. Nick, thanks a lot, Nick, just for the hellos and thank you. But any other questions out there before I wrap it up? Because that was the last question there on the agenda. But people, there it is, Warren Buffett himself. He stepped down as CEO at the end of 2020. He will step down as CEO at the end of 2025. It's a lot of things out there. The opportunity is now. But again, you got to prepare. Now, are we in a recession right now? According to the news, no. Prepare. The opportunities are there. The opportunities are there. Or they will be there very soon. But if you don't start just stashing. And that's what we're doing. That's what we've been doing for years. I've been talking about it. Stash money away, stash money away, stash money away. Because it's going to be some sick opportunities out there. I was just looking on bids for sale. There's some crazy offers out there. And it's a lot more creative financing going on too. There's a lot of these sellers talking about, hey, we could do some seller finance or we could do something to get out of this. Because they see the writing on the wall. So you don't need to sit there and buy a business and have, $500,000. It's some alternatives out there to make that happen. But you got to do the work to make it happen. If you think somebody's about to just call you out the blue and say, hey, Kirby, we want you to do this deal with us. If you ain't put in the work, that call ain't coming. You can see properties on Zillow and Redfin all you want to. They ain't going to call you unless you go out there and put the work and put boots on ground. And speaking of boots on ground, next week I will be in another state looking at property, and I'll give y'all the rundown of what's going on there. But I will have the financial wrap up, and I will make time to have our weekly call on the live, so we will do that. But if there is not any more questions out there in the comment section, y'all have a good one. See you next time on The Process. And don't forget to like, subscribe, share. And then we got videos come out every Monday and Thursday. Please hit the likes on those, comments, share those videos also. Help a brother out. Thanks a lot for y'all joining. We'll see you on the next one.